everyone, Simon Barwick here from Bentleys Wealth Victoria. Hope you're well. Presenting our monthly portfolio and market update for February 2026. Firstly, this is general advice, so if you do have a question, please speak to your advisor. Well, when we look back on the markets recently, and even back into January, the global market has actually been a little bit resilient, even though there are some selective risks which persist. Global growth is persisting, and it is being supported by policy tailwinds from central banks and some earnings momentum. And this is despite persistent inflation, if we look at some geopolitical risks as well. Overall, in the US, the S&P rose about 1.4 to about 1.5%, reinforcing this resilience. If we look at the Australian market, the Australian economy is stable, but it is being constrained by inflation currently. And it's really around these sticky services, and which has the possibility of limiting growth. Commodities remain the main support for equity valuations, and the ASX 200 gained about 1.8% in January. So when we look at the commodities driving ASX outperformance when compared to global, it is really also being supported by the gold price. If you look at the gold price recently in January, it was incredibly volatile, even though it hit all-time highs. And we had a price variation of between 4,000 and 5,600 US dollars. So that's almost a 30% differential. So there was a lot of speculation happening in the market at that time. If we look at US equities themselves, we think they're fully priced, but they are being justified by earnings growth. So this favourable growth-adjusted metrics are supporting the returns, but there are some, they are starting to look a little stretched. It will mean that companies that fail to meet their earnings targets are going to continue to be punished heavily. One of the sectors that we looked at recently in our quarterly investment committee meeting was the software sell-off and concerns about how AI would impact this sector. We've really seen this across US tech stocks and into Australian small cap holdings, and both have been hit hard by this sell-off. We believe it might have been some overselling in there, and we continue to hold our position, but it's one sector that has definitely suffered recently. Other notable news in January was Kevin Warsh's appointment or nomination, for the US Federal Reserve Chair. Markets generally were favoured this appointment. If we look at some of the other themes that are dominating, really we're looking at emerging markets, private equity, and as we've talked about, AI. If we look really at the emerging markets, the fundamentals are underpinning some long-term growth opportunities beyond large cap equities. What we've seen by some positive returns in both the Australian and US market means that funds will then flow to emerging markets in due course. If we focus on India, which has been one of our sectors that we've supported recently, we have seen that Indian equities have consolidated, valuations have normalised, and earnings are expected to grow through to 2026. And this is also supported by trade deals and easing monetary conditions. Although our holdings are negative, we still have a positive outlook over the short to medium term. Well, that's me for this month. If you do have any questions, please speak to your advisor. We look forward to assisting you where we can, and we'll see you next month. Thanks.